Hello everyone, this is Brian Rezny, President of Rezny Wealth Management, bringing you an update on the U.S. stock market, economy, and key developments shaping our financial future. Today we're diving into the resilient U.S. economy, the stock market's recovery, the potential of the One Big Beautiful Bill, and how tax cuts, deregulation, and improving trade relations are setting the stage for stronger, more consistent growth over the long term. Let's get started. First, let's talk about the U.S. stock market. Despite tariff-related turbulence earlier this year, stocks have shown remarkable resilience. The S&P 500 has rallied nearly 20% since its April 8th low and is now just 3% shy of its all-time high. Global equities, tracked by the MSCI All Country World Index, even hit a record high last week. This rebound is fueled by solid corporate earnings, easing trade tensions, and a shift in policy focus toward pro-growth measures like tax cuts. However, valuations are elevated, so we're advising clients to stay diversified and focus on quality investments to navigate potential volatility. Now let's turn to the economy, which continues to show strength despite some cooling. The May jobs report, released last Friday, added 139,000 jobs, slightly above expectations, with healthcare and hospitality leading the way. Unemployment held steady at 4.2%, and wage growth outpaced inflation, supporting consumer spending power. The Atlanta Fed's GDP model projects a robust 3.8% growth for the second quarter, a sign that the economy is weathering tariff headwinds. However, uncertainty around trade policies has businesses cautious, with some slowing hiring plans. A major catalyst on the horizon is the One Big Beautiful Bill, which passed the House and is now in the Senate. This bill aims to make the 2017 Trump tax cuts permanent, introduce no taxes on overtime/taxes on Social Security, and offer incentives like a universal 401k from birth and factory building write-offs. House estimates suggest it could boost GDP by 4.2 to 5.2% and create 6.6 to 7.4 million jobs over 4 years. The tax foundation projects a more modest 0.8% GDP increase and nearly 1 million jobs, but warns of a $2.6 to $3 trillion deficit hike over a decade. If passed, this bill could supercharge investment and job creation, though we'll be watching the deficit impact closely. So, tax cuts and deregulation are really key pillars of this growth strategy. The 2017 Tax Cuts and Jobs Act already proved its mettle, spurring a 20% bump in investment and 5 million new jobs, especially in manufacturing and, distressed communities. Today, over $4 trillion in new investments have been announced since January, with $284 billion in manufacturing and $50 billion in opportunity zones. Deregulation, including efforts from the Department of Government Efficiency, is reducing red tape and encouraging a risk-on environment for financials and small businesses. These policies are leveling the playing field for American workers and manufacturers, and honestly, they're fostering high-quality, sustainable jobs. Trade relations are also improving, which is, critical for long-term stability. Recent talks between U.S. and Chinese trade officials signal a potential de-escalation of tariff tensions. President Trump's strategy of using tariffs as leverage appears to be pushing countries like China to the negotiating table. Hopes are high for trade deals that could lower tariffs, as seen in Trump's recent call with China's leader Xi Jinping, which he described as very good. Reduced trade barriers would ease inflationary pressures and boost exports, supporting consistent economic growth. Looking ahead, the combination of tax cuts, deregulation, and smarter trade policies positions the U.S. for faster, stronger growth. However, risks remain. Tariff uncertainty, a potential debt ceiling debate, and elevated valuations could spark volatility. The Federal Reserve's path on interest rates will also be key, especially as inflation hit a 4-year low, giving the Fed room to cut rates if needed. For now, the fundamentals, corporate profits, job growth, and consumer resilience provide a solid foundation. Remember, volatility is normal. I would not rule out another 10% pullback this year before we have the potential for higher ground. At Rezny Wealth Management, we're optimistic about the long-term outlook but cautious in the near term. We're helping clients position portfolios to capture growth and income while managing risks. If you have any questions or concerns, please call the office. And as always, we appreciate your business, your trust, and your referrals. Keep us in mind with family and friends, and make sure you forward this educational video to your family and friends so they can get the same high-quality education you receive.